Hello and welcome to the market update from 26 March to 28 March 2024. So this update would not be just limited to the weekly update, but also be extending to the financial year closing update, how the markets and how the economy fared in the last 1 year. So let's start with the US Treasury 10-year bond yield, which closed at 4.2% for this month. This year it started at close to 3.7%, and then it reached a high of 5%. This was the this was the lifetime high that the US Treasury bond yields reached, and then they settled to close to 4.2%, which is still fairly high. This might indicate that we have reached a zone where US Treasury bond yield would be trading higher in the coming years. If we look at the markets, the world over markets, we saw that the year was very good on all the markets. The US market closed in positive, close to 10%. The European market was doing very good. The Germany market also close to 10%. The Asian market, we had a surprise coming from Japan's market, which closed to 21% positive. Taiwanese market closed at 13% positive, whereas other markets were relatively flat in this year. But it was overall a very good year for the markets in the crux. Now we move to the oil prices. The oil closed at $87.5 a barrel. In this year, it started at a high of trading at close to $82 a barrel. Then it cooled in the month of May, June, and July, when we saw a lot of FIs putting money into the Indian market, and then it again rose to the touched the highest of $95 a barrel, and currently it is trading at $87.5 a barrel, which is still fairly high, and that is why we are seeing a lot of money. The FIS pulling a lot of money out of the Indian market. This I don't think this price would come down to 70-75, which is favorable for the Indian market. But I think this would trade somewhere in the range of. It will cool down to the range of 80s in the coming month. The other data point that we will discuss is the FII/DII. For the week, FIIs were positive, surprisingly positive. They bought some close to 2,368 crores of equity. DIIs has been the net buyer throughout the year, and they closed this year by buying 8,913 crores worth of equity in the last week. So, if we look for the whole year, we see that the DIS had bought close to 1,000, sorry, not 1,000, 1,49,000 660 crore worth of equity, whereas the FIIs were net sellers. So if we look at the data from the perspective of last 10 years, we are seeing that relatively FIIs have been pulling out of the Indian market. There have been only few instances where they put money into the Indian market, but for the rest of the time, that it's the DII or the domestic investor who have shown confidence in the Indian market, and they are putting money into the Indian market, and the market has been running. There's another interesting fact which I tried to plot here in Nifty, which was whenever the FIs have been taking the money out of the Indian market, we always see that the Nifty 50 or the large cap index movement is very limited in that period. But also we are seeing that the small caps were affected. We see that in 2015-16 cycle, we see the FIS pulled out money. In 2017-18, FIS pulled out money. The Nifty small cap was negative. 2018-19 also FIS were pulling money, and it was only in the year 2021 when FIS had has put money into the Indian market close to 2 lakh crore, when the small cap index started gaining. And it was after that, I think it was led by mostly by the Indian investors. Now we move to the gold. In a surprising move in the last 1 to 2 weeks. In the last 1 week, gave a return of 2.74%. closing at 67,800 per 10 grams. So the yearly growth that we saw was from the gold was 13.9%, which is a very surprising move from gold. The CAGR return of the gold for the last 44 years now stands at 8.72%. If we There's another interesting fact to note here, that if we look at the 10 years rolling return since 1992 to 2023-24, we see that the gold is catching up with the Sensex on the rolling return basis, where the gold return is currently at 9.97%, and the Sensex is giving a rolling return of 10%. So, making it a strong case that gold is still an asset class which you should do look for your diversification or asset allocation goals. The major reasons that we are seeing this price hike happening in the gold is due to geopolitical tensions and the elections that are coming in the major countries in the coming year. So we move to the market performances. Well, let's start with the weekly performance. The short week that we had, the 3 day working week that we had in the market, we saw positive results coming out of the market. The Sensex gained by 1% in the 3 days period. Nifty Bank was up by 0.5%. Nifty Mid Cap was up by close to 1.4%. Nifty Small Cap was also up by 1.4%. If we look at the year-on-year performance, that is how the major indices traded in the year, we see that Sensex and the Nifty 50 was up by 24%. Nifty Bank closed up by 16%. Nifty Mid Cap was up by 60%. Nifty Mid Cap 150 was up by 56%, and the highest rise was taken by this Nifty Small Cap, which closed at 69.77% for the year. If we look at the PE valuation, the on the valuation front, we see that there was some correction that happened in the last 2-3 months, and this has led to Nifty 50 now trading at 22.9, which is fairly above 2 years average and below 5 years average. Nifty Midcap 150 trailing P is at 26.7, above 2 years average and 5 years average. Nifty small cap 100 trailing PE is at 25.5, above 2 years average and just below 5 years average. If you look at the Buffet indicator is showing that currently the market is currently fairly valued. So in overall context, we can say that the Indian market is currently fairly priced, if not very low price, but it is at a fair valuation as of now. So once we start looking into the data of how the Sensex have been performing for last 44 years, we see that Sensex has given a return of 14.75%. And in the last year, we saw that the Sensex had given a return of 24.85%. But if we look on the rolling return basis, we see that on 10 years rolling return basis, that is from 2015 to 2024, Sensex has given a return of a CAGR return of 10.17%, whereas on a 15-year rolling return also the return is at 10%. So we see that there's a if we compare it with the overall return, there's a 4% mismatch in the rolling returns over 10 or 15 years. So there's a catch up that data is indicating that the market can do if we say that the Sensex has to give a return should give a return of 12 to 14% in the overall basis. So we now move to the candle charts. As discussed in the last video, we was looking at that on the daily basis, Nifty 50 was not able to break its resistance line at. It was consolidating actually at in the range of 21,900 to 21,132. It has broken that line, but it has still not been able to break the channel, upward channel, though it tried. If we look at this into weekly chart, it was trying, but it was not able to break that. On the mid cap, we see that on a daily candle chart, it seems to have tried to break the another resistance of 48,000, but is still consolidating at that level, but definitely there's a reversal trend on the weekly chart that we see after the confirmation of a green candle. Though it was a very small week to make out any conclusion, but the next week would definitely give out a better result. That would it increase or would it consolidate in this channel? The same goes for the Nifty small cap. It is also trading. It also tried to show the positive result after being in negative for the week for the last week with the trend reversal that we can see, and we have to look into the next week's data to see how this would pan out. So for the Indian bond markets, the Indian 10 years government bond is currently trading at 7.052% yield. In a surprise move for the last 1 year, we've been seeing that the short-term yields have been in an inverted zone, which has corrected to now into a flat zone. So for the starting this year, we are seeing that all the three yield curves, that is the short term, mid term, and the long term, are in a flattish zone. Uh, so that is from my side. I hope you enjoyed this video. Do share, like, subscribe to our video so that you can get weekly updates and more information on the market from us. Thank you.